Lending calculations loan to value ratio, LTV. Ratio between the mortgage loan amount and the sales price or appraised value of a property. Common equations, LTV equal sign. Loan amount, property value. Loan amount, equal sign. Property value, X LTV. Discount points, additional fees paid to reduce the interest rate of the mortgage. Common equations point dollar amount, equal sign. Loan amount, X, number of points, equal sign, point dollar amount, loan amount. Equity, cash value of real estate after deducting all debts. Common equations, equity, equal sign down payment, plus, original loan amount, current loan amount, plus appreciation. Qualifying buyers. Licensees can estimate mortgage costs in order to determine the monthly payments for a purchaser. Common equations. Monthly PI equal sign, loan amount $1,000. X loan payment factor. Proration. The share of expenses that the buyer-seller will pay at closing, XHOA dues, utilities, taxes, and rents. Commissions. Calculated as a percentage of the sales price. Common equations. Commission amount equal sign sales price, X commission rate. Commission rate equal sign commission amount, sales price. Sales proceeds, profits. Amount of money received from selling a home. Common equations. Profit, equal sign. Sales price, purchase price. Sales price, X commission rate. Finance question 10. If the loan-to-value ratio, LTV, is 80%, and the buyer puts 20% down and pays $1,000 in cash for 2 points, what is the sales price of the property? 1. $55,750 2. $70,000 3. $62,500 4. $50,000. Finance question 10. Analysis. Answer 3. Difficulty. Hard PSI topic subtopic. Real estate calculations, lending calculations. Trap. Outside of understanding the math, the only trick that you must remember is the value of a point. Still, we rate this as hard, given the difficulty most students have with this level of math. Explanation. A point is 1% of the loan amount. $1,000 paid for points, 2% equal sign $50,000 loan amount. Buyer puts 20% down, so the loan is 80% of sales price. $50,000, 80% equal, sign $62,500 sales price. Transaction calculations, total money needed by buyer at closing common equations, amount needed, check purchase price, amount financed, plus closing costs, deposit transfer taxes, fees charged for transferring property ownership. Common equations, total transfer tax, shaker, sales price, X state tax, plus sales price, X county tax. Comparative market analysis, CMA, an informal valuation used to recommend a listing or offering price. Common equations, average sales price. Total comparable sales prices, total number of comparables. Income properties, apartments, offices, etc. Common equations, annual effective gross income. Annual gross income, vacancies and credit losses. Annual NOI. Annual effective gross income, annual operating expenses. Value. Annual NOI, annual rate of return. Annual NOI, earned value, X. Annual rate of return. Annual rate of return. Annual NOI, value. Finance question 11. A property sold for $168,000. There was an existing first trust in the amount of $75,000. The seller paid 6% commission and $2,100 in closing costs. What were the seller's net proceeds from the sale of his property? 1. $165,900, 2. $90,900, 3. $72,900, 4. None of the above. Finance question 11. Analysis. Answer. 4. Difficulty. Medium. PSI topic. Subtopic. Real estate calculations. Calculations for transactions. Trap. Some students will hesitate if they cannot find the correct answer among to answer choices. Do not be thrown by the none of the above option, especially if you can confirm your calculation. Explanation. Start off with the selling price, $168,000. Next deduct 1. Commission, 6% of $168,000 equal sign $10,080. 2. Closing costs, equal sign $2,100. 3. Existing loan equal sign $75,000. Therefore, the net proceeds to the seller equal sign $80,820. valuation calculations, depreciation, a decrease in value based on the original property cost, common equations, annual depreciation equals sign cost x, annual depreciation rate, cost equals sign annual depreciation rate, annual depreciation rate equals sign, annual depreciation, cost, current value as a percentage equals sign, annual depreciation rate x number of years, current value equals sign, cost x, current value as a percentage, cost equals sign, current value as a percentage, current value as a percentage equals sign, current value, cost. Mortgage calculations down payment, amount financed, the difference between the amount that a lender is willing to finance and the purchase price. Interest amounts, the cost of money. Amortization, monthly installment. On the exam, you may be asked to create part of an amortization schedule. This shows the monthly payments or balance after a few months. See textbook, for example. Finance question 12. An eligible VA buyer applies for a VA loan. What is the maximum amount that a lender will loan based on the following information? Selling price of property, $102,500. CR by VA appraiser, $104,300. County assessed value, $96,200. 1. $102,500. 2. $184,000. 3. $104,300. 4. $96,200. Finance question 12. Analysis. Answer: 1 difficulty, hard PSI topic, subtopic, real estate calculations, mortgage calculations trap. This is not really a math problem, but a test of your understanding of VA programs and lending practices. Explanation. Lenders establish their loan-to-value ratios on the basis of the selling price or the appraised value, whichever is lower. The maximum amount that a lender will loan in this situation is $102,500, which is the selling price. Finance question 13. Utilization of property in the most profitable manner is called 1. Highest and best use. 2. Economic life. 3. Reconciliation process. 4. Principle of conformity. Finance question 13. Analysis. Answer: 1 difficulty, easy PSI topic, subtopic, valuation and market analysis, value trap. This question requires that you match the stated definition to the proper term. Explanation. Property is at its highest and best use when it is used in a way that provides the greatest return to its owner. Finance question 14. The Truth in Lending law requires full disclosure of financing terms when certain trigger terms are used in advertisements. Which of the following is least likely to trigger truth in lending disclosures? 1. Down payment. 2. The April 3rd. The number, amount, and frequency of payments. 4. Miscellaneous closing costs. Finance question 14. Analysis. Answer: 4 difficulty, medium PSI topic, subtopic, financing, and credit laws trap. Although straightforward, this question illustrates the level of detail you must understand about TILA and other finance, broker finance, and credit laws. Make sure you understand when tested laws do and do not apply, in addition to what duties such laws impose. Explanation. Miscellaneous closing costs such as attorney fees, appraisal fees, recording costs, prepaid insurance, and taxes are not costs of borrowing money and therefore do not trigger Regulation Z TILA disclosures. Finance question 15. If a promissory note contains an exculpatory clause, the lender 1. May seek a deficiency judgment. 2. May not seek a deficiency judgment. 3. May not foreclose. 4. May foreclose. Finance question 15. Analysis. Answer: 2 difficulty,